For that great panel. We were talking about big data and ways to manage it better and more effectively. We're going to shift gears now and start a conversation around FinTech for climate and nature. And this panel is powered by BIS Innovation Hub. That's the Bank for International Settlements. They've got a booth over in the other hall, and you'll want to go check them out. They've got a great presence. We have joining the panel will be Yvonne Tsui, Senior FinTech Director with the Hong Kong Monetary Authority, Max Song, CEO of Carbonbase, Entela Benz, the CEO of Intensel, my apologies for mispronouncing that, Intensel, David Sandor, co-founder and CEO of Allinfra, and leading the Powered by BIS Innovation Hub session, Teresa Lin, advisor with BIS Innovation Hub. Plenty of seats if you want to come in from the back. We're just starting on FinTech for climate and nature here on the showcase stage. Please join me in welcoming our panelists.
Hello, everyone. Thanks for joining us today on this panel dedicated to talking about how innovations and technologies can help in climate finance. And I'm Teresa from the BIS Innovation Hub. At the BIS Innovation Hub, we explore how technology can support central banks and the functioning of the financial markets. And I'm super excited today to be joined with panelists here, starting with Yvonne from the HKMA and three very proud homegrown fintechs, each representing AIs, blockchain, and IoT technology. So let's do a quick round of introductions, starting with Entela.
Yeah, I'm the CEO and founder of Intensel. It's a climate risk. It's an AI-empowered digital platform for measuring financial risk related to climate change.
Sorry, I think the sound is not very clear. Can you speak louder?
Louder? Okay. Okay. I'll speak louder. So I'm the CEO and founder of Intensel. It's a digital platform for measuring financial risk related to climate change.
Yeah, and Dave?
Dave Sandor, I'm the CEO of Allinfra. So we're a Hong Kong-based Web3 climate data platform, and we help organizations meet their ESG goals. We've got technology that allows you to collect, store, and then use climate data, and the use cases are normally things like reporting or creation of financial products.
And Yvonne?
Hello everyone, good afternoon. I'm Yvonne, I'm from the FinTech Facilitation Office of the HKMA. I work closely with the BIS Innovation Hub on a lot of the innovative projects.
And Max?
Hi guys, I'm Max Song. I am the founder and CEO of Carbonbase. We are building Asia's first digital carbon registry. We use it as a metaphor. We call ourselves a climate central bank. There are 4 of them in the world today. They're all located in the US and Europe, and we're Asia's first, very proudly based in Hong Kong.
Okay, thank you. So let's start our panel by asking Entela a question, because you work in 2 buzzwords, AI and climate data. Can you talk to the audience about how you leverage AI to bridge the data gap in physical climate risk data?
Would you like me to use this one, or is it okay?
Maybe using that one is better.
Or I can speak like this, I can hold it. That's fine, yeah, that's fine. In a simple answer to the question will be, without AI, we cannot build the product. So we need AI, we need deep learning, we need supercomputers, we need satellite imagery, satellite data, etc. to build. Let's make it very simple. A couple of weeks ago, we had a black rainstorm in Hong Kong, and there was, of course, a wonder that we did not expect these events. With our product, we already know which building in Hong Kong has risk. In terms of risk, we talk about flood risk, typhoon risk, drought risk, landslide risk, etc. And we know this not just in Hong Kong, but globally. We know where the risks are, and we know how much risk is there now and in the future. So to come to that, you need to leverage not just on a climate data, the global climate model, regional climate model, downscale and bring them down to the very high resolution. But you have then, but you have to couple climate science, which is terabytes of data. You need to couple that to the asset level data. Where is the asset located? What is the slope, the elevation, the land cover, land use, the catchment of the water, etc. And then you need satellite imagery to see the area and the height, etc. So it is not possible to build a product where you can assess climate risk at that particular location without leveraging on this data. That's number one. And number two, it is more important now than before to leverage on big data, AI, and supercomputers. Why is that? Well, climate is changing, and it's not changing in a linear function. It's changing in a very dynamic way. So to capture all these dynamics between climate variables, one needs to rely on heavy models and data.
What sort of AI are we talking about? Because there's a lot of talk about generative AI. Is your kind of AI different? What kind of AI are we talking about? Is it generative AI? Because everyone's talking about Gen AI. But I understand from what you said just now, it's a little bit different from Gen AI.
It's different from Gen AI. It's mostly on the climate side. The climate side is mainly supervised models on AI. Then we have to increase resolution. Then we rely on computer vision models for topography and higher resolution. To increase the rainfall data, then of course, then another type of model that is increased. So there's different types of AI, different machine learning, deep learning product at various stages of the product.
Yeah, so machine learning and deep learning.
Yes.
Thank you. Dave, BIS Innovation Hub and Allinfra worked on a project together called Project Genesis, and it's a tokenized green bond project with smart contract-based carbon credits. And one of the observations from that project is that blockchain and Internet of Things technology can really help the transparency of the integrity of the green bonds as well as the carbon credits. And I know you work in also corporate ESG data reporting and assessment, as well as other financial instruments. Can you talk to the audience a little bit about how technologies like blockchain and IoT can help increase that transparency and integrity?
Sure. So, I guess if you just take a step back, environmental financial products are one of the only financial products where the quality of the data is one-to-one linked with the value of the product. So if you think about a renewable energy certificate, a carbon credit, even a green bond, if the underlying data is poor, the value of the product goes to zero, and we've seen that recently in the carbon credit space. So it's a great use case for blockchain technology and for IoT. And so what we did on Genesis was implement, digital technologies, both on the tokenization side, so creating a digital form of instrument, but I would argue, even more importantly, have a real-time data feed from the asset being funded, and then linking that real-time data feed to the end financial product, which meant that anyone buying that end financial product could be certain about where the data came from. That data was permanently tied to the end financial product, made it far more transparent, made that data far more timely. So what also happens in the market or in the traditional space is that the reporting regarding the underlying asset is typically very delayed. And so you have this gap, this time gap between when someone purchases something and when they find out about its performance, for instance. There's typically a large gap, 6 months, 12 months. Our technology allows you to have almost real-time reporting, and that's very valuable. So it's a great use case for the technology, and when you combine IoT and blockchain technologies and digitization, again, you can permanently tie that source data to the end financial product, and I think that enhances liquidity, it reduces trust in intermediaries, increases transparency, and at the end of the day, it reduces cost for the asset owner who needs to provide a high level of granularity with reporting.
Thank you. So it's really about the real-time information on the asset level. Thank you. And Yvonne, you were also instrumental in the Project Genesis 1.0 collaboration. Can you share from your experience from the HKMA FinTech Facilitation Office what makes a prototype project successful, and how do you prioritize which technologies to experiment with?
Good afternoon, everyone, and thank you, Teresa. As to what makes a prototype successful, I think there are several factors which can attribute to the success of a prototype project. First, the prototype should have clearly defined goals. This involves identifying the problem statement and understanding what needs to be achieved through the prototype. By having a clear vision of the desired outcome, it becomes easier to guide the development process and also measure its success. Second, it is crucial that all potential solutions would be considered. It means that exploring a wide range of technologies and approaches which could address the identified problems. This allows us to leverage the strength of different technologies and also find the best fit for a particular project. It is an ongoing process, and because the prototype, because after the prototype is developed, we can continue to address any gaps and limitations during the project phase. Last but not the least, it is important to ensure that the chosen technology aligns with the expectation of the users and the stakeholders. It will then ensure the smooth adoption and also minimizes any disruption to the current practices. And when it comes to prioritizing which technologies to experiment with, we adopt open mind to all available options. To achieve this, we conduct researches and discussions with the industry to understand the different technologies and solutions which are currently in the market. And these are the experiences I had. And ultimately, I think it is the continuous improvement and also the exploration of suitable technologies that are essential to unlocking the full potentials of a prototype project. Thank you.
Thank you, Yvonne. And Max, you mentioned that you just launched a blockchain-based carbon registry, so super congratulations on that. But there already exists multiple registries globally. Is there any gap that you're trying to address with this new launch of the carbon registry, and what makes it different from the current one?
Thank you. Thank you so much. So as I said before, there's 4 registries in the world today. They've been around for 17 years. So why do we need a new one? Well, if you look at the geographic distribution, all of the registries today are located in United States, United States, United States, and Switzerland. And so, sitting, here in Asia, and obviously looking at the massive emission problem that is kind of, where we're living in, this seems relatively unbalanced, right? So having something in Asia seems to make sense just from an initial perspective. If you look a bit deeper at the data, 70% of the projects registered on the existing registries originate in Asia. And I've spoken to 30 project developers at the CEO level, at the founder level, and they're very frustrated with having to do all the hard work here in Malaysia and Cambodia and Bhutan, and then go and beg for recognition from the West. Now, that's step number 1. Step number 2, what Dave said, is that the quality of the projects registered are mostly determined by their PDFs. So we live in a world today of massive data transformation, right? Our panelists are using machine learning to look and quantify real-time risk. How can we still rely on PDFs to make sure that the projects have credibility? So we're building a digital native registry where our connections for input are APIs. We allow people to input gigabytes of data into our registry to actually quantify and certify the continuation of the validation of the projects. Vera is a very big registry. They're 80% of the market. Unfortunately, Vera in January had a big scandal. 90% of their forestry credits were discovered to be worthless. 90%. If you buy a bond and it's written down 90% value, that's a serious thing. Someone has to get fired. So in the case Vera's CEO had to depart from the company. We think that there's a massive opportunity for data enrichment actually to provide the underlying backbone. The final thing I would say, and something I'm very excited about, is actually on the consumer level. How do we bring the carbon credit market and generally climate action into the hands of everyday people, right? Some of you guys here have ever touched a carbon credit. I would say 90% of you guys have never done so. So the other dimension of our API system is actually to embed an SDK into consumer-facing applications. Booking.com, Ctrip, Travelocity, food and restaurants, giving the consumers at an individual transaction level the ability to start accounting for their personal carbon footprint. That's really going to change the way that we actually look at the climate change problem.
That's very exciting. So far we've talked about demerits and the promises that these novel technologies can bring. So let's switch gear a little bit and talk about the trends and adoption. Starting with Entela. So financial regulators around the world are increasingly asking banks to incorporate their climate risk into the the risk management framework. But it seems like transition risk is getting more attention than physical risk. Is there any reason, or do you have any insights on that?
Yes, I totally agree with that. It's more than 95% of the talk on climate risk is on mitigation risk and very little on adaptation. As somebody put it, mitigation is sexy, adaptation is hard, is costly. So companies are more inclined to talk about climate mitigation and wrap that as a climate risk overall. Now the issue is that adaptation is, of course, is expensive. You have to build resilience and you have to plan around it. But for this, you need good data. You need to identify, you need to quantify, and then you have to come up with adaptation resilience. So it's a longer process and it's harder to do from A to Z. On the adaptation, from the banking perspective, or from a financial institution's perspective, is even more important to bring that further on. Why? These risks, the risks that we face in climate change, extreme weather events, are actually concentrated in the financial sector. We're talking about inability to pay a loan. A bond value goes down by 90%. Property revaluation, insurance costs, these risks are sitting on the books of banks. That's why they are asked to do stress testing. There's a good reason why they have been pressured from regulators to do stress testing. Can they do it? They can. It depends to what extent and to what robustness they can execute this. I believe banks it's new to banks, it's climate science, it's new to most of the market. You need resources, you need data, you need technology, you need to know what you build and why you build it and how to build it, which takes time. It took us 3.5 years to build this product with full-time people, PhDs and other front-end and back-end engineers. So it's not easy. You have to have a very solid structure around what you're building. And ultimately, you have to then take this data via APIs or via software, whatever the platform you're using, you have to integrate in your existing risk models. At the end of the day, it's just risk. How is it going to impact your asset valuation? How is it going to impact the asset allocation, the mortgage portfolio, etc. So climate is just the first step. We need to go beyond the first step, which is just measuring. We need to start integrating. We need to start adapting, etc.
Yeah. And also measuring that climate risk into putting it into a financial value. That is the most difficult part.
Yeah, absolutely. And that's why we started the company to start it. I'm a quant by training. I come from financial industry. So for me, at that point, 4 years ago, I said, we need to bring climate science to financial market. You can quantify. And having a background in asset pricing, I see climate models much more solid than asset pricing models. The only uncertainty there is what are we going to do about carbon? Because carbon is what drives global warming, and that warming drives the wind speed, rainfall intensity, etc. So it's all about human uncertainty, which comes and translates into model uncertainty. Yeah, thank you.
Thank you. What about blockchain? Dave, is there any trends that you see the blockchain-based solution in climate space develop in the next 1 to 2 years?
So I guess anyone who's followed the Web3 space or the blockchain space, there's been so much press around tokenization of product, tokenization of real-world assets, these sorts of things. I mean, the reality is that the value of that, I think, is limited when you look at it in a broader context, particularly in the climate space. So there's a lot of focus on tokenizing credits, tokenizing RECs, and all that sort of stuff. But if you really want true value, you need to look at the process, or the creation process, if you like, so the steps before that. And so I think over the next 12 to 24 months, you'll probably see far greater focus on the application of the technology in that part of the product creation process. And that has a lot more value for everybody, right? More value for the buyer, more value for the seller. So it ends up being hopefully cheaper for the seller to create the product. The buyer ends up with a better product. If you do it in the right way, maybe the product can be traded far more easily across different markets. I think we'll probably see, I'm not sure whether the world needs like the nth carbon exchange, right? There's many carbon exchanges coming. There have been many in the past. I'm not sure that creates a lot of value for people. So again, it's more back to technology focusing on the creation of the product is what I think will happen over the next 24 months.
Thank you. And Yvonne, what because the HKMA launched the first tokenized green bond in February this year. Can you tell us a little bit more about the motivations behind that project?
Yeah, sure, Teresa. Yeah. We think the deployment of DLT to existing processes in financial markets hold great potential in achieving efficiency gains in both issuance and also settlement of the tokenized bonds. The HKMA's bond tokenization journey started 2 years ago with a project Genesis, which my fellow panelists have just mentioned. Together with the BIS Innovation Hub, we concept tested the issuance of tokenized retail green bond in Hong Kong with special features like individual wallets for investors and also tracking environment impact in real time. Last year, we decided to take the project forward in real-life setting. We had been issuing conventional green bond under the government green bond program since 2019. And we decided to leverage the program to try out this new innovative issuance format. As with any tech project, it was a big leap go from POC to production. So we decided to stay prudent and start a small-scale issuance targeting institutional investors only. This way, we could test out the efficiency gains of the tokenization technology as well as compatibility with our legal and regulatory regime. After a few months of intense preparation and also with the help of banks and also lawyers in Hong Kong, the Monetary Authority launched the inaugural tokenized issuance in February this year. It was a landmark transaction and the world's first tokenized green bond issued by a government too. In order to fully unlock the potentials of tokenization, we will be in the future exploring more further use cases, addressing the fragmentation issues and also enhancing the legal and regulatory regimes.
Thank you. So just, I know we're running out of time, but I still want to ask this question. For Max, from your perspective, on an ecosystem level, what do you think needs to be done to scale up the carbon credits that we need in order to achieve the 2050 goals?
Definitely. So just to kind of give you some broad numbers, we emit as a civilization about 52 billion tons. And in order to meet our climate commitments, we need to drop it down to 25 billion in the next 5 years. So that's never been done before in human history. The only time we actually reduced emissions was in GFC, 10%, and COVID, 6%. We didn't do 50%. So the industry we're involved in is kind of interesting. It's kind of a positive externality industry. As we actually find ways to invest money into decarbonization, we actually benefit the entire material world we live in. We reduce climate risk. We actually allow people to have the ability to continue with their lives. In order to do this, we need to actually put huge amounts of resources in. Something we're very excited about is the launch of the Frontier Fund, right? This is the US Silicon Valley Advanced Market Commitment, $1 billion buying carbon to $2,000 a ton. That starts attracting about 200 startups created every year actually for the commitment of actually meeting this particular market opportunity. We are in the process of convincing more corporates to launch AMC programs. If people in the audience can talk to us, it's something we're very happy to sort of walk you through. The AMC program was visually concepted by Eric Schmidt's foundation, Schmidt Futures, and so we're in touch with some people there that actually sort of wrote the white paper behind it. On top of this, we also need to actually have international linkage, right? The carbon market is not a local market, it's a global problem. We need to have global interactions. I was very lucky to come back from Riyadh recently in Saudi Arabia. We spoke at the closing keynote for FII, the Future Investment Initiative, and we actually are shortlisted for the tech sprint organized by the UAE Central Bank. So we think that the connection between Hong Kong and the Middle East actually is going to generate a lot of more opportunity. The Middle East is committed to becoming the first oil-producing carbon-neutral country in the world. This means that they're going to have to spend a lot of money buying carbon credits, crazy amounts. We think that there's an opportunity to basically supply from Asia, right? Organize it, put the data behind it, and then make sure that they actually find credits that they can believe in long term. They don't have to get embarrassed about in the future. Last thing I would say, the carbon markets and what we're building as a registry is a system enabler. We think that by having this registry exist here in Asia, we can create tens of thousands of new jobs, actually for people who are carbon auditors, carbon buyers, carbon developers, and all of the technology infrastructure that goes into it. This is actually an opportunity to really grow the green space in GBA, and we're very excited to be a small part of that bigger picture.
Thank you. Okay, let's just conclude with one thought that you want to leave with the audience today, starting with Dave.
Focus needs to be on the creation of the financial product, not on the end tokenization.
Entela?
There will be a lot of revaluation, asset valuation starting next year onward, the next 2 years. We'll see very interesting development in the market, which starts now to price in physical climate risk.
Max?
We will continue the good spirit and to work closely with the industry and with the help to bring a better, sustainable and resilient economy.
Max?
Our carbon market design allows people to make money and save the planet. It's like we designed it to be a win-win solution for all of the market people out there. So come find us, come talk to us, come support our fellow panelists. We're living at an exciting time to really save the future. Thank you.
Thank you. With that, let's give a round of applause to our amazing panelists. Thank you for staying with us. And enjoy the rest of
Thank you all very much. Very good panel. And we don't have time for questions and answers in our panels today on the venture stage. So if you've heard something you want to follow up, please go on to the Hong Kong FinTech Week app or on Swapcard, and you can find every one of our speakers there, connect with them, even set up a meeting if you want to. So we're going to now talk about the use of digitization for the preservation of art and cultural artifacts. Now, those of you here in Hong Kong may have heard of artifact labs and their historic way of preserving front pages of the South China Morning Post and other historical assets. What they've managed to do is set really a benchmark for all museums and cultural institutions. We're going to hear about how blockchain is revolutionizing art and cultural assets. And we've got a great panel for you now. We have Zaf Chow, the CEO and co-founder of Artifact Labs, Ang Jin, the Chief Growth Officer for South China Morning Post, Li Xin Ko, Assistant Director of Partnership with the National Gallery of Singapore, and Joyce Lee, Director of Arts and Culture at Artifacts Lab. And for the first time today, it's an all-female panel. So, yay, thank you.